Fed Chair Jerome Powell says he'd be cutting rates now without Trump's tariffs, although he's still open to a cut later this month. Australian consumer confidence rises, South Korea's exporters diversify, and Japan is still on track for a rate hike. That's coming up in our 5 Things in 5 Minutes on Wednesday, July the 2nd. And then in part 2 of our deep dive interview, ANZ Group Chief Economist Richard Yetsenga talks about what's needed to support the growth of Australia's First Nations economy.
There can be differences in the way businesses are done, and they can still be vigorously commercial, but they can be deeply collective, and particularly in the pursuit of shared goals.
But first, in 5 and 5 with ANZ, US Federal Reserve Chair Jerome Powell spoke overnight for the first time since Donald Trump sent him a handwritten note telling him to cut the Fed funds rate immediately and by a lot. Powell remained resolute, though, saying he wants more information on the inflationary effects of tariffs. Here's ANZ economist in London, Bansi Madhavati, to explain.
He acknowledged that if tariffs were not in the picture, the Fed would be cutting rates. Coming to the next policy move, he said that the Fed has a meeting-by-meeting approach. When asked if July meeting will be too soon for a rate cut, he said he would not take any specific meeting off the table or put it directly on the table. Look, these comments, we are interpreting them to tell us that the Fed remain very data dependent.
As of 4 a.m. Sydney-Melbourne time, the S&P 500 was flat. The US 10-year Treasury yield was up 5 basis points to 4.25%. Gold was up 1.3% at $3,350 an ounce. West Texas Intermediate Futures up 0.4% at $65.36 US a barrel. The US dollar index was flat, recovering somewhat after some big falls, and the Aussie dollar was also flat at 65.75 US cents. The Kiwi was up 0.1% at 60.90 US cents. Number 2. ANZ's Roy Morgan Australian Consumer Confidence Survey found a rise of 0.5 point last week on further strength in the time to buy a major household item sub-index. ANZ economist Sophia Angala says confidence in financial conditions weakened, but the economic outlook rose.
What could have driven that is an array of economic data prints that we got last week. So ABS job vacancies rose in the 3 months to May. So that does suggest that the labour market is likely to remain tight. We also got the monthly CPI data for May, which showed that core inflation, the trim mean measure, printed at its lowest level since November of 2021. But despite that inflation data, we did see that the weekly inflation expectations measure was steady at 4.7%.
Number 3. Headline New Zealand business confidence rose slightly in the second quarter, according to NZIER's quarterly survey of business opinion. However, ANZ senior economist Miles Workman says there are signs that the recent economic recovery is starting to splutter.
The overall signal coming out of the QSBR for Q2 was on the dovish side of expectations, particularly when you're looking at the forward indicators for economic activity. So on that front, domestic trading activity for the current quarter, that actually deteriorated versus the quarter prior, which certainly suggests downside risks to both our and the Reserve Bank's GDP forecasts, which are already pretty modest, to be perfectly frank. Meanwhile, labour demand is looking pretty soft as well, but we are seeing a bit of a pickup in investment intentions.
Number 4. South Korea's exports showed some signs of recovery in June, rising 4.3% from a year ago after a 1% fall in May. ANZ economist Crystal Tan says exports to the US were still down 0.5%, but there are signs of diversification.
So, for example, auto exports traditionally, the main market is the US. So those have been impacted by the US tariffs. But what we've seen in June is that auto exports actually climbed 2.3% year on year after 2 months of declines. And this is actually the strongest June on record. And what's happened is there's been an increase in shipments to the EU that helped offset the decline in US demand.
Number 5. Business confidence in Japan lifted in the second quarter against expectations for a fall, according to the Bank of Japan's Tankan survey. ANZ international economist Tom Kenny explains what that means for the Bank of Japan.
All up, the Tankan survey points to a positive growth look underpinned by the services sector and capex. Extremely tight labour market conditions and elevated inflation expectations suggest that the upward trend in underlying inflation remains intact. This, we think, should be supportive of the Bank of Japan raising rates again. We do know, though, that the Bank of Japan wants it to wait a bit to get some clarity on the tariff situation, as sentiment could deteriorate, threatening the positive growth look and muting inflation. We expect the Bank of Japan to get this clarity in coming months and to hike in October by 25 basis points.
Tom Kenny there. Now, in part two of a deep dive interview on the recent Deloitte Access Economics report into Australia's First Nations economy, ANZ Group Chief Economist Richard Yetsenga and ANZ economist Sophia Angala spoke to my colleague Alex Tarrant about what's needed to support the growth of Australia's Indigenous businesses.
The Deloitte Access Economics report released with ANZ models the growth potential of the First Nations economy when expanding that access of First Nations businesses to wider markets and networks. So in that situation where you have businesses having stronger access to existing networks and markets, the First Nations economy could generate revenue of $46 billion by 2035. And you unlock that growth by expanding access to business memberships and corporate procurement markets, just allowing First Nations businesses more access to suppliers and also self-determination over natural and cultural resources, such as in land use agreements. But you can take that higher if businesses across all industries see accelerated growth, as when we take advantage of that relational nature across First Nations business owners, it allows for increased opportunity for growth via the First Nations economy's connectivity in their business relationships and networks, and also through the expansion of their supply chains as well. When the First Nations economy grows, the Australian economy grows also. And with this expansion, you can see the First Nations economy is forecast to reach around $50 billion in revenue by 2035.
Richard, what's needed in order to unlock some of those higher scenarios then? How do you get those larger businesses? How do you get that capital deepening that might be required to reach that sort of goal?
I think there's two things. We've already spoken about the investment. That's, if you like, the tactile need. But there's also things that are a little bit harder to define, recognising reality and adjusting perspectives on the part of non-Indigenous businesses. I think there has been a bit of a perception or a misunderstanding that First Nations businesses are in some way different. Maybe they've got more element of social good than business good. And rather than being seen as an opportunity for economic success through maybe a slightly different approach or a slightly different lens. And this recognising difference, I think, can be really powerful, recognising that there can be differences in the way businesses are done and they can still be vigorously commercial, but they can be deeply collective, and particularly in the pursuit of shared goals. And also, of course, sustainability, something which is increasingly talked about in the context of climate. And there's a real opportunity there if we can marry those things so people and communities can achieve economic agency and demonstrate to others that the version of Indigenous businesses is a model for everyone in the economy.
Richard Yetsenga there with Sophia Angala talking to Alex Tarrant. I'm Bernard Hickey. That was 5 and 5 with ANZ for Wednesday, July the 2nd. Catch you tomorrow with a look at how Australia's building industry has been performing. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.